please like and comment on the video below. That will allow me to produce better quality videos and more of them in the future. So I'm in the City of London today. I'm at 155 Bishopsgate, and that is because Matchbook have a traders conference here today, which they very kindly invited me to talk on a panel. So I'm looking forward to doing that just after lunch, but let's go inside and have a look. So I'm at the event now, I've got my badge, and I'm looking forward to listening to the whole range of speakers that we have over the course of the day. There are actually quite a different number of types of speakers here. We've got people talking about statistics within the market, high frequency trading, and we've got the panel that I'm appearing on, but we've also got Harry Findlay as well here. So a very diverse mixture of different types of people, bringing a number of different things to the mix. And I think they'll all be very interesting to listen to, so I'm looking forward to a number of these different presentations. So we just had a really nice lunch, not too much because I'm up and talking next. Just been into the room, check the mic and sound and everything seems to be fine. But it's really nice to see everybody sat here talking about trading and all of those sort of things. But I'm up next, don't know what questions are going to come from the floor, hopefully a couple of interesting ones in there. But really looking forward to the session this afternoon.
So welcome guys. Let's start with you telling about yourself, your journeys as to how you got into trading. We'll start with you, Dan. Yeah. Where it all started, and also a little bit about how you define your strategy.
Yeah, sure. So I graduated from university when I was about 20 years old. Did an accounting and finance degree, so I kind of always been quite comfortable with numbers and focused in that area educationally. And in my last sort of year and a half of university, I managed to be lucky enough to bump into someone who could advantage play fruit machines in pubs. And managed to graduate with savings, which is not many people can say, and tried to get some accounting graduate jobs, and the competition's really quite tough in that industry. You could still make money playing slots on the side. Gave myself 6 months and thought, right, okay, see how it goes. Did it for about 10 years. Primarily, it's just in the pubs, it was sort of short-term advantage playing. So you identify when the machine was above and below percentage targets. And latterly, I can still stay in touch with some people and manage to get some quite good information from time to time, which tends to focus now around expected value calculations. And I would say honestly now, if machines were still good, I'd still do it because it was like the lowest variance possible that you could ever wish for. And the money was mega consistent and good money. Dried up a bit and I moved into online poker. Did a few years playing online poker, which I enjoyed, but then as you're probably aware with your background as well, yeah, we had Black Friday. And all the Americans kind of pretty much disappeared overnight. And primarily when you're playing online poker, you're looking to identify who the bad players are to take the money off. And a lot of those players disappeared quite quickly, and it was like a bit of what we call a shark fest. And everyone's the money's circulating around the table, and everyone's sort of taking it off each other, and there wasn't so much of an edge. And then moved into sports really because I was looking for something else to do. I've always been good with numbers, and looked towards football initially, didn't work out great, and then found tennis. And tennis really isn't, I'll say, my number one sport in terms of a fan, but maybe that provides me with a bit of an advantage over someone who is a fan because I can look at things more objectively. You know, people, sometimes I get emailed and say, how can you bet against Roger Federer because he's a legend? And I'm like, well, he's not a legend. He's a legend of what he's achieved, but he's not a legend personally in my eyes because I'm not really a fan, if that makes sense.
So you're principally an in-play tennis trader then?
Yeah, so basically, kind of momentum is, I think 2 years ago when I did a presentation here, I gave momentum a bit of a kicking, and going against momentum is quite a big thing for me. So I developed quite a lot of stats, in-play stats, which you can't really get commercially because I wanted them for my own purposes, to look at opposing players with momentum. So players may be leading by like a set and break, for example, they're trading really low in price, and then you can try and, looking at opposing those players when they're leading and in a dominant position kind of thing. There's a few other spots as well, but primarily it's like kind of like low risk, high reward type stuff.
All right, let's go to Ken. Now, Ken, you and Peter are probably leaders in also the education of traders. Your blog, from oh shit to aha. So tell us, you started at oh shit and now you're at aha.
Quite literally.
I love that
oh
title
shit,
of a blog. Yeah.
Okay, so my journey into sports trading started purely by accident. I come from the recreational punting side of things. Beforehand, I was just betting purely on horse racing. Quite frankly, I didn't know what I was doing, as many do. At the time, I was in the military, so I was in the army, and I served overseas in Afghanistan. And it sort of come to one of those transitional points within my life where it was like, what's going on here? I want to live a little bit longer, for a start. And secondly, at the same time, I found out I was going to be a father, so I needed to sort of address the financial situation in my life. I didn't have any grades or qualifications or, advanced stuff like that. So,
I mean, we've all been in that spot, but in your case, you're actually in work.
So I thought, hey, I know how to deal with this. Let's start betting more. Made perfect sense. But fortunately, that turned out quite well for me, yeah. So it didn't go down well with those around me for quite a long period, but come out on the other side and sports trading and horse racing markets is what I do.
And it's been about 6-7 years.
Sure.
And Peter, you are probably one of the pioneers. I think I read that you joined Betfair, was it 7 days after it opened? So this is like 99 or something?
It was in June 2000.
Yeah.
I think it was the 18th of June 2000 was the exact date. Not that I've edged it on my brain or anything. But
I was a little late to the party. I don't think I joined Betfair until like 9 or 10 days after they opened.
Yeah, I was in consumer technology, bizarrely, and I'd always had an interest in financial markets, and that was going to be my escape from the corporate life. So I'd gradually worked my way in a long and winding road up the corporate ladder, and I'd sort of reached the point that a lot of people reach, which is that you sort of think, I can't do this any longer. The business plans were the same every year, which was basically the same as last year, plus 20%, but you're not getting anybody else to help you do it. And I sort of realized after a long period of time that I was going to have to make a break at some point. So the break for me was going to be financial markets. That's where I was going to go. I'd messed around on them for years, and I thought I'm just going to give this a proper go. And it was at that point that betting exchanges came to the fore. And I had gambled in the past, but bookmakers had banned me, and I realized it was just a dead end. The overrounds were massive, and there was just no advantage, and there was no way that I was going to do it for a living. It just wasn't going to work. So financial markets were going to be where it was going to go for me. But then exchanges came along, and I remember sitting in a board meeting with my laptop open, and everybody thought I was making notes, but in fact I was closing a FTSE up-down position, which was heavily in the money at that point, which I feared by the end of the meeting would have lapsed for zero. And I got called over afterwards, and one of the guys saw what I was doing. And it was at that point that I thought, well, I've really got to make a go of it. If I'm going to do it seriously, and I like the concept, and I think that there's an opportunity here, then I've got to make the break. So turned up to do the annual business review, and just put up one slide, which was find a replacement for Peter. And that's how my journey started. And it's been a great journey, and I'm here now 17 and a half years later.
And of course, in addition to being a successful trader, you built really one of the anchors of trading, sports trading, which is BetAngel and stuff like that. So you're very involved in the software behind it. Now, your tennis, Dan, you're mostly in horse racing, Ken, and Peter, you're involved in soccer and pretty much everything.
Yeah, I do. If there's enough liquidity, I'll trade it.
Before we open up to the general questions, I mean, is there something about your guys' strategies that is tailored to those sports? When you get together, is there stuff you guys take from each other, or are you kind of like, well, I know he's successful, but I couldn't do that? I mean, could you be in racing? Could you be in tennis and vice versa?
It's funny enough because we kind of spoke about that sort of thing earlier, and I said if I was doing what you do, maybe I'd think about looking at it this angle and stuff like that. So yeah, we did kind of talk about that.
Yeah, I think
earlier.
we approach things in very different ways, but kind of come around to a similar result.
Yeah, exactly that.
Yeah, I think at the core of trading, I think there are many ways of trading. So if you're a value guy, necessarily you're looking to spot value, or as Dan said a second ago, momentum in tennis is, you can see it in the markets. You know, a set and a breakdown, you realize the price is very different from perhaps where it should be. But I think there are so many different ways of trading and so many different ways of participating in the market that there's room for many different types of strategies. But typically, my way of trading comes from financial markets. So I look at value and I look at opportunity, but I consider myself to be selling volatility. That's what I consider my role is within the market. If people panic, the price moves too far away from what I consider to be a decent price, then I'll correct it. I am part of that mechanism that makes the market efficient.
All the opportunity for traders right now is still really limited by market size?
I think that the market could cope with a lot more liquidity. And that's yeah, I've been to the US frequently over the last 10 years or so with the goal of trying to gain some traction, mainly through talking to people and, you know, trying to, but of course, you know, you have a lot of things to go through there, mainly legislation. But depending upon how you decide to trade as well, you'll get a slightly different answer. So certainly for the way that I trade, if you gave me 1,000, I could still give you 2,000 back. But if you gave me 1 million, then you're severely restricted. So if you look at the average UK race, it does about £500,000. And so the more liquidity that we get, the better. And to be honest, I really thought that after all of this time, we would be at the stage where an individual racing market would be doing millions. And that's sort of where I want to see the whole exchange concept go. I'm not talking about specifically, you know, one exchange partner or another. I want to see it absolutely massive. And if the US came on board, then that would be absolutely massive. And I'm hoping that all of the US citizens live up to Dan's expectations, because that would be massive for us as well.
I resemble, as I said, I joined Betfair 9 days after it opened, still yet to have a winning year there. So, I mean, you know, you definitely want the Americans on.
Betfair premium charge. I assume you're paying it. I guess you are. How much does that actually affect you?
But I think, in all honesty, it's a good question, because it is an issue within the industry, and that is why your matchbooks exist, because there's a positive outlet there for that sort of money. So the bizarre thing, and you know, one of the issues that I have with the premium charge, is as the markets have become more efficient over time, the great thing about exchanges is the overround now is absolutely minimal. It's absolutely tiny. So the edge that you're having to overcome to be able to make money is the smallest that it's ever been in the history of this type of market, in betting in general. So the bizarre thing about the premium charge is that it makes no sense for me to bet on Betfair. So all of that activity and all of that business goes elsewhere, which doesn't seem to make any sense to me. But obviously, for our sponsors today, that makes fantastic news. So it does seem a bit contradictory. You know, there must be a better dividing line.
Well, you could say that the premium charge, it goes hand in hand with, you know, the commission structure. I mean, Ronan Ryan, if you're before lunch, he said he's counted, is it 864? I think he said different commission structures for financial exchanges. We certainly have a lot of different ones in the sports exchange as well. You know, are we clear right now? Is it clear what's best for the different groups?
I think the main problem with premium charge is the way it's calculated, because it's very flat across the board.
Yeah.
There's not like an annual allowance or something like that. That would be far better in my opinion. But obviously they've got to factor in people doing different things, different edges, court-siders, people taking a lot of money out of the market via other means.
Yeah, and I think the problem for me is I was miles over the limit when it was first introduced and when it was revised. I had no chance to mitigate it, absolutely no chance. But people who are below it now do get the opportunity to mitigate it before they breach that level. So it's totally unfair on people like me, although you could argue that I was one of the people that actually helped create it in the first place by doing too well. But I think there is a better model. Having come and spent a lot of time in financial markets, I'm used to an ECN, a pure exchange, where you pay a transaction charge. Now, I don't want to pay transaction charges, but by the same measure, I don't want my profits to vanish, because I'm risking my own money on my own terms to put that through the market, and I should be rewarded for that, not punished.
I'd be interested if you could give a couple of examples when things that might make you make a trade. So selling volatility, a couple of examples of when you would do that, and for all three of you, really.
Yeah, I think you could give several. I know what the perfect trade is. I've scored it in my head 10 out of 10. And it happens, just not very often. So you're generally dealing with a graduation of opportunities. Some are awful that you definitely shouldn't take advantage of, and some are slam dunkers. And you need to do everything you can. But I think there are two key things that I see in the market that repeat on a regular basis. The first one is overreaction. So I sat down with a hardcore racing gambler who knew so much information about this horse, and you could see the price was coming in and coming in and coming in. He was going, well, it's gone up in trip, it ran well last time on this ground, etc., etc., and he wouldn't back it. He was from a trading perspective, you want to back it and see the price come all the way in. But from a betting perspective, he was just sort of saying, well, there's no way that the price should be coming in, so I can't initiate this trade. And I said to him, but it's coming in. And he goes, yeah, but there's no reason why it should do. And I said, but it is. That's happening right now. But what you often tend to find is that when momentum builds for a big trade like that, it goes too far. And all of a sudden, it's way beyond what could be accepted as reasonable value. And it will correct before the start of the race. It's just a question of how long is that going to take and how much time do you have that trade to do. The other thing I'll add into the mix as well is you look at major meetings where you have a jockey that wins 2 or 3 races, and guess what happens? Everybody starts backing the jockey on the next horse in the next race, even if it's got absolutely no chance of winning. And that makes for a perfect trade, but it's a terrible bet. But you try and stop people from doing that.
It's a bit like what Dan said earlier about separating the fanaticism from trading what you see rather than what you want to see.
And I mean, it sounds like Dan actually forms opinions, does stats and analysis. Do you guys more lean towards, I don't want to know anything, I don't want to have an opinion, and is it more just about the market for you? I mean, is analysis overrated in your business?
I think one of the biggest things that you can gain from an edge in the market, I think it is important to an extent to know what value is or where the price roughly should be, whether you're looking at the specific pricing of somebody winning an event, a tournament, or some other aspect, or whether you're looking at where it trades within the market. Because if Manchester United are odds of 6 against a team bottom of the league, then that's obviously value, and there's probably something in there. But if they're at odds of 1.1 against the team 2 places below them, that's a very different thing. So you have to have some measurement or general perspective. But in terms of knowing the detail, I think certainly Khan and I are more interested in order flow. So you can do all the analysis you like. You can say which horse is going to be backed on the ground and whatever. But if it's not being backed and they're going for something else, it's right in front of you. All of that information in the market, all of the detail and knowledge that's within there, for some reason, is directing you straight into that particular runner. So you go with that. And, pure cold trading is how you would exploit that situation. So your ability to read the market outside of the form and other stuff is quite important within that. But you can use both. But typically, I'd say that both of our styles are typically trading order flow.
Right, you're not coming up with a tissue. I mean, an actual... Yeah.
No, I've done it, but it didn't help. It made no difference to me.
Hello. Yeah, talking about order flow there, we heard from the guy before about false orders being put in on the stock market and spoofing. Does that happen much on the exchanges?
Should we both take that one?
I'll let you take the lead on that one.
Yes, is a very short answer. There is this game of cat and mouse going on. So typically, at certain moments in the market, at certain price points, you do tend to see false orders within the market. My attitude to that is that you expect it. So the ability to read through that and see what the general trend within the market is more important to me than realizing that there is false money there. But typically, if you see a large order, then if you know it's likely to be breached, then it may just give a little bit more momentum. But it happens all over the place in the sports markets. Do you want to add to that, Carl?
No, I think
Can you teach that skill? Or, I mean, honestly, do you think that is a learnable sort of...
It is.
Yeah.
It is. It's funny because when you watch markets, I've now traded nearly 200,000 horse races. And when you trade that number of races, you see the patterns repeating again and again and again and again. So after you sit there and watch it for that length of time, you begin to understand the dynamics of how that occurs and why it occurs in that particular manner. So you're sat there, all of a sudden an order appears and you think, I've seen this before and I know exactly what's going to happen next. So it is possible to do it, and you can explain it, but experience is...
You can get extra value from it as well.
Yeah, experience is an important part of doing that as well, because not only do you have to identify a situation, know what's likely to happen next, you have to have the balls to actually do something about it.
Because, I mean, you guys are all quite really open. I mean, you made videos, you know, let people watch you trade it. It's quite open. And I think there is sort of like this question about, you know, are you guys athletes who are above the rim, or is your method really transmutable? I mean, how do you guys feel about the people who have learned from you, you know?
Yeah, I think the difficulty with trading is that there's never a definite yes or no to anything. And you're always in a grey area. So you're sort of saying, well, this is likely to happen, but there's a chance that it may not. And so I think psychology comes into play a lot, and it's quite easy to identify when you see people who've got the right psychology or not. I've had a couple of great examples in the last couple of days. But one of the things that helped me evolve as a trader was understanding that decision-making process. So I got really deep into the psychology of trading and started looking at prospect theory, which if you've never read up on it or you don't know what it is, wiki it straight away and start reading up on it, because it describes how people treat profits very different from losses and how that influences the decisions that they're likely to make. So when I'd read up on this and understood the way that it influenced the market, then from my perspective it allowed me to exploit it. But from the general market perspective, even if you give somebody a really, really good strategy that's absolutely perfect, that they cannot lose money on, they will lose money. So you have to combine those components together. I think, you know, there's a bit of analytical stuff that Dan's talked about. You need to be able to understand and trade the markets, but you also need to have your head in the right place to do it.
I think that, just to add to that, that applies a lot more, I think, to sort of pre-race horse trading, because the markets are more sentiment-driven. There is a lot more of that at play.
Yeah.
And it's the part that's easily forgotten and the part that's not very glitzy and everyone wants to talk about, but it's a huge contributing factor.
It is. I totally agree. And if I do a video on psychology, nobody watches it. But if I do a video on how to make 150 quid in 2 minutes, I'll get loads of likes on it.
Yeah, exactly, yeah.
And the fact is, it should be the other way around.
Yeah.
Hi, Peter. About 10 years ago, when you were kind enough to appear on Dew Storm Radio, I think your turnover was about, well in excess of $1 billion then. That was 10 years ago. What is it today?
The difference between 10 years ago and today, for example, is that I do more markets than I do now. So I'll cover, for example, I picked up and started doing greyhounds again this year, which seems total madness because nobody does it. It's very illiquid. But I just fancied the challenge of getting involved in that. So I must admit, I don't know how much I've done on greyhounds this year, but it would be pretty significant, I would think, because there are about 100 races a day that you can participate on. But for me, part of the equation was not understanding that you could do something, it was pushing the scale on which you could do it. So as people know and often take the mick out of me, you know, it's a real rarity today for me not to have a laptop and to be trading right here, right now. Because it will always be something that takes priority. I've only had one Saturday off in 17 years.
My gosh.
Simply because that's the biggest day of the week. So I can't give you a definitive answer on what it is, but I'm much more active than I was 10 years ago.
Is that affecting your ROI? I mean, obviously, you know, the bigger your bank gets, then your ROI has to go down a bit, I would think, no?
Yeah, any excess capital gets invested, basically, now. So I spend a bit more time investing now than I used to 10 years ago. So any excess capital that I can't use in the market goes and is invested, or I'll have a punt on VIX or something at some point in the futures.
If you guys are consistently winning, you must have trouble finding people to take your bets, unless you're paying up in the high fee range on Betfair. What do you do about this issue?
That was similar to the first question, wasn't it?
Yeah, I mean, you know, are you guys also in the position where you try and get on regular bookmakers and have trouble getting?
Typically that lasts a day or two, yeah. Pretty much.
I originally started arbing years ago when I first joined Betfair. That was the very first thing that I did, was I figured out that I could get 16, 20 to 1 on a golf player in the US and then stick it on an exchange at a much lower price. And so I was typically arbing in the very early days. But that all vanished fairly quickly because nobody wanted to take my position. So I sort of gave up using bookmakers a long time ago.
It's funny. I mean, if you try match betting, I would say you could say everybody that tries match betting and takes it seriously is successful. You could take sports betting in general and say 5% or even 1% of people are successful. What about trading and taking? How easy is it, and how high is the failure rate?
I guess part of that depends upon what you're trying to do. So I consider myself to be an outlier in terms of what I've achieved. So if I would never sell it on the basis of somebody replicating what I've achieved. But if you want to do better than you have done with a gambling strategy, you'll almost certainly do better. But in terms of the rate at which people do or don't make money, it's going to vary dramatically depending upon what exactly they're attempting to do. And I must admit, I do not know what that rate is.
Do you have any stories about getting in too deep? I mean, or do we?
Yeah, I remember the worst trade that I ever did was that it's now called Chelmsford City. It was Great Lees back then, and I got on the wrong horse at the wrong time. The price went the wrong way, and I still thought it was fine. And then I realised that my PVR, I'd actually rewound it. And so actually the race was about 20 seconds in front of where I was, and then suddenly it went in play. And the whole thing just disintegrated. And I've never had one as bad as that ever since. That was quite a few years ago. But yeah, sometimes the worst possible losses are the ones that you don't even think about.
Yeah, I think just to add to that, there's sort of two elements to that question. The first one is obviously just constantly reassessing the situation, because only when the situation, it depends how dramatic it is. When it turns, that's when you want to look at sort of scaling out or closing out the position. And the second one, particularly more for people that are newer to trading, I think, is knowing your own personality, because if you can't cope with the tick increments of profit, the amount it's moving, then you're probably better off taking a small amount out straight away. That's more sort of the
but
beginning.
But also stake sizes as well. If you're panicking because the positions have gone against you, your stake is probably too big.
Yeah, if you know that's evoking that emotion and fear in you, then you're better off downsizing it anyway. So you've got sort of clarity for the decision.
The thing that I would add to that would be, if you're entering for a reason, right? And instead of having like an arbitrary tick loss that you are prepared to tolerate, I would maybe encourage you to think, does the condition that I entered the market with still exist? And if it does, then maybe you might want to hold it for a longer period of time, if that makes sense.
So just finished the talk now. We've just gone out for a little break. I thought it was an interesting chat. There were some good questions there. Nothing too difficult, although a couple of the ones I expected did come up. But anyhow, I'm going to watch some of the remaining presentations now and probably have a few drinks afterwards. But it's been a really good day. And I'm looking forward to doing the next one, whenever that may be.